What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. You know what's really weird? This cardigan. Besides that. So I just went to the bank to deposit a check, and when I went to the teller and handed her the check, she told me that I will be able to access my money whenever I want after 48 hours. Have you heard something like that before? It's standard banking talk, but it's not the full truth. So in this video, I want to talk about your bank, your money, and what happens if your bank runs out of money, because banks can run out of money. And before we get into it, pause this video and leave me a comment below with what you think happens if your bank ran out of money, and we'll compare answers. Oh, and leave me a thumbs up too. So pause this video, leave me a comment. We'll compare answers in just a little bit. And now I have my handy dandy extra large Blue's Clues notepad to help explain how it works. So you have $1,000 that you go and deposit in your bank. When you deposit your $1,000 in the bank, your money doesn't just sit in the bank's drawer or in the bank's vault, because that will be a losing transaction for the bank. The bank takes your money and they invest it. And the way they invest it is by lending it out to other people. So your bank might lend your money out to John, they'll lend it out to George, and they'll lend it out to Nancy. And then John, George, and Nancy will pay the bank in interest plus your principal, and they'll typically pay somewhere between 5 to 25% interest on their loans or lines of credit and their credit cards. And then the bank will pay you a very small nominal interest, somewhere like 0.1% or 2% on your deposits. So this is a simplified version of how it works. I don't want to get too complicated, because what actually ends up happening is the banks use something called fractional reserve lending, where they work with the Federal Reserve Bank and they turn your $1,000 into $10,000 out of thin air by printing money, and then they loan out $10,000 instead of $1,000. But if you understand this concept, you will understand what we're talking about in this video. So you get the idea, right? You take a bunch of $20 bills that equal $1,000 and you go to the bank and you deposit it, and you think that you can get your cash back at any time. But that's not exactly true, because after you deposit your $20 bill, your bank will give this $20 bill to somebody else. So if you go to withdraw $20, you'll still get $20 back. It just won't be the same bill that you deposited earlier on. Big whoop though, right? Who cares which $20 bill you have? Like, the serial numbers on the bill don't mean anything as long as you have $20 in your hand, right? I mean, $20 is worth $20. Yeah, most of the time it's not a problem, but you will care if the bank runs out of money. So now, if we go back to the same example as earlier, where you deposit $1,000 in the bank works with the Federal Reserve to turn your $1,000 into $10,000, and then the bank loans it out to John, George, and Nancy, and now, watch this. P-L-O-T, plot twist. The economy turns bad, and now John lost his job and he's behind on his payments. George has declared bankruptcy, and Nancy hasn't made a bank payment in months. Now, all your money is gone. It's been lent out, and your bank isn't getting any of their money back. So now, if you go back to the bank and you say, "Hey bank, I want my $1,000 back," they'll say, "No problem." What they'll do is they'll take this guy right here, Parmeet, who deposited $1,000 in the bank last week. They'll take his $1,000 and then they'll give it to you. So now you got your $1,000 back. John, George, and Nancy got money from the bank, which was originally yours, and they're not giving it back to the bank, so the bank is missing this money, they're missing your money. And now if Parmeet wants his $1,000 back, well, then the bank will try to take this guy right here, or girl, they'll take this person's money and they'll try to give it back to Parmeet. You can see it gets a little confusing, and this might be able to go on fine for a little while, but you can see the bank is running into some choppy waters. So if this chain of losing money keeps happening with the bank, eventually your bank will become insolvent and they will run out of money, and your bank will have to close the doors, and if you didn't already pull your money out,
your money will be gone.
If you've ever heard of a bank run, this is exactly what it is. everybody's running to the bank trying to get their deposits out before the bank shuts down. Now, you might be thinking, oh, Jaspreet, that's so unlikely. That's only happened like a few times in the last 100 years. But that's not exactly true. The FDIC keeps a record of total bank failures and bank insolvencies, and between 2000 and 2019, there haven't been 10 bank insolvencies, or 50 bank insolvencies, or 100 bank insolvencies, or even 500 bank insolvencies. There have been 555 bank failures over those 19 years. To put that in perspective, 555 bank failures over 19 years averages about 2.5 bank failures a month. But you do need to understand that if your money is in a bank and your bank shuts down, you're not completely out of luck. Like, if people found out that their life savings were gone, there would be panic and unrest and riots, and nobody wants that, which is why the FDIC was created, which is the Federal Deposit Insurance Corporation, which protects your savings and your deposits up to $250,000. It's insurance, so if your bank closes down, the government will come in through the help of the FDIC and pay you whatever your deposits were up to $250,000. While that's very important to prevent chaos, the FDIC insurance does come at a cost because the government doesn't have any money to begin with. The government gets their money to pay back these deposits through taxpayers and tax dollars. And now that I think about it, the FDIC would be a very interesting video topic. That being said, you never want to run into an issue where you don't know where your money is, which is why financial education and investing is so important. And if you want to learn more, I'll link a video in the description below where you can learn more about investing. Thank you for watching. If you enjoyed our video, hit that thumbs up button and share it with one friend so we can help spread the word. Don't miss our new videos on entrepreneurship, business, and money every Wednesday and Friday at 7:30 a.m. Eastern Standard Time. So hit the subscribe button and the notification bell below. That way you actually find out when our new videos are released. And as always, keep hustling.